Yeah, oh, so much has happened. I mean, it's funny. Like you look at human years and dog years, right? And dog years is like you get 1 year of dog years, 7 human years, they say, right? Well, it's like the same thing with like traditional finance and Bitcoin. What we see going on in Bitcoin, it's like 7 years of things happen in 1 year in Bitcoin. And TradFi is just they've had it good for so long that they're oblivious to what's happening. It's amazing that Bitcoin is well over $100,000 after dipping from 100 down to 70, with many people calling for lower lows and an elongated bear market. It just turns out that we just happen to be right back where we were. So all of that happening over that course of the time frame, the thing that I find interesting is that, to me, it's undeniable that the cycle is maturing. By this time in previous cycles, price would really start be popping off to extreme premiums to cost of production. I mean, extreme premiums. And in some cases, depending on your setup, and even if you don't use cost of production, but you use Bitcoin fair value, price is still at a discount to Bitcoin fair value. So some miners are kind of barely profitable, looking in that 80 to 95,000 range, depending on your setup and your OpEx and CapEx costs. So at small premiums, and then based on Bitcoin fair value, still at extreme discounts. So where we are in the cycle, to me, based on price performance, is signaling that something in the cycle is changing. And to me, it goes back to what I said before, which is, we're moving out of the commodity phase and we're moving into the money phase. So we're no longer going to go in this real short commodity cycle, but through the monetization and financialization of Bitcoin, we're now moving into a credit cycle. And that's what you're seeing right now. A bunch of Bitcoin lending companies are now starting to get into the game. We've seen Jack Mallers hop out and talk about Strike's lending product. We have other lending companies getting into the game. We have Bitcoin treasury companies doing reverse mergers and accelerating that. So on all fronts, the monetization and financialization of Bitcoin is accelerating. I believe those are the main drivers that are actually leading to the change, or I would say the maturation of the cycle itself, where we get these boring periods. Bitcoin went up to 108, 109, came back down to the mid low 70s, and in previous cycles, this correction would not have lasted this long. We would have corrected that big, players would have been washed out, and we would have ripped back up a lot faster. But the distribution phase in these cycles is showing you that it's no longer OGs and whales and exchanges and free market makers playing in this market. There are big institutional players, institutional accumulators, and therefore the supply demand dynamics are changing and the cycle dynamics are changing with that supply demand dynamic. So it's exciting to be a Bitcoiner at this time, because I don't think we're going to get those big pullbacks that everybody has anticipated in the past. Sure, we're going to get the pullbacks. That's the regular part of price discovery. But truly, we are watching the maturation of the marketplace, of the asset class, through the monetization and financialization of Bitcoin. And I think, with People's Reserve advent later this summer, raising Bitcoin up, officially evolving it from that digital gold to pristine collateral. Not that just you can borrow against your Bitcoin, but that you can borrow against your Bitcoin at the most competitive interest rate in the world.
Really interesting. I love that you say like commodity to money cycle, which is super interesting, and don't hear a lot of people talk about that. What are the implications that we're now in this money cycle? You already talked about the lower pullbacks, but is this like bigger institutional players? I also saw the same thing where like, okay, we are seeing a bull run, but the excitement is not there from a retail crowd. I feel like if you look at Google Trends, it's like very low. And it's also, I don't know if you have experienced the same thing, but when I looked outside of the Bitcoin bubble, when we first reached, I think like 5th of December, the 100K mark, nobody cared outside of Bitcoin. Nobody was like, yeah, of course, 100K. Like people were like, that's the normalest thing ever. I thought 100K is like a huge point for the mainstream media.
Yeah, absolutely. Nobody, I mean, in Bitcoin X, we're all excited. We know what's happening. We're watching it happen with our own eyes. And it feels like a fairy tale. You go out to a family event or a church event or with your friends, and nobody's talking about Bitcoin. Nobody is talking about what's happening in the financial system. Most people, if they're talking about anything, happens to be, at least here in the United States, happens to be with like Trump tariffs, and some people are actually getting into interest rates, which is, it's pretty funny to hear normal people talk about interest rates and bond vigilantes and lack of treasury debt. So it's amazing how the conversation in the mainstream has matured itself, but at the same time, it's like they really don't understand what they're talking about, right? It's like every once in a while you get that trending topic, and then everybody becomes a professional doctor or a professional lawyer because the topic is trending and everybody's got to put in their opinion. And we're not anywhere near that right now. Like, you get lucky if you hear a Bitcoin conversation. You get lucky if you hear a economic or interest rate conversation, but you are starting to hear them, and that rate of luck is starting to increase, which I think is a signal that things are really going to start heating up here. And unfortunately, $100,000, a lot of people think that that's a lot of money for a Bitcoin, so they're waiting, right? If Bitcoin's 103, it's 104. That's so expensive. I'll just wait for it to come back down. But in my opinion, the way I see this playing out is the next stop for Bitcoin is the price of a single family home. And that's when I think regular people are going to wake up, at least here in the United States. I think the median price of a single family home here in the United States is like 400 to 450,000. So I anticipate that when Bitcoin gets to 400 to 450,000, a lot more people are going to be paying attention, because once we go beyond that level, it's going to be almost impossible for the everyday person to accumulate a whole Bitcoin. I mean, Janet Yellen, who was not my favorite Secretary of the Treasury, she did have at least one good quote. And that quote was that Americans' most important source of wealth is in their home equity. So in order for a person to buy a home, most people are using a mortgage. And then that home becomes almost like their savings account. And it takes a lifetime. It takes 30-year mortgages, 30-year pledge of working and paying to accumulate your home. Well, Bitcoin is about to cost more than a home. And I think that realization of, wow, I thought the most expensive thing I would have to pay for in my life is my home. But instead, it's actually going to be access to savings technology, because we live in a world where the ability to save has been stripped away by the system itself. And in order for the system to maintain a semblance, I don't want to say stability, let's say in order for the system to maintain status quo, they're going to need to keep printing money. Therefore, there is no savings vehicle in the world that lets you outpace inflation, the true rate of inflation, which is the expansion of currency units. So Bitcoin being this savings technology, I think that's in our minds, like in Bitcoiners' minds, yeah, we're going from digital gold to pristine collateral. But if I go up to a normal person and say the words pristine collateral, they'll look back at me like I'm speaking another language. They have no idea what that means. But when they realize that, hey, it's harder to accumulate one Bitcoin than it is a single family home, that's going to set off some of the light bulbs and help people understand what's really happening here. So it's really interesting that it took 16 years to go from zero to $100,000. What about the next $100,000? I think we can get the next $100,000 in less than 16 months. So 16 years to get the first 100,000, most likely less than 16 months to get the second 100,000. And then from that point forward, the only way is up, especially with the way the U.S. administration is talking about Bitcoin. Global adoption of Bitcoin is going up. The supply is just not there. And at some point in time, we will have a repricing of the entire asset class. And that's the move you don't want to miss, because it's going to be much higher than a single family home. I think we go to the 7-digit level, and that will be your next psychological level, that $1 million level, where we have to have another thing since we hit 100, right? We first hit 100 and we mellow out, we go through distribution, we bounce up and down. I think single family home, million, distribution, mellow out. And that mellowing out could take a while, or it could accelerate through. I don't know. These Bitcoin treasury companies, I think, are the variable that we need to keep our eyes on, because remember, it's not just retail anymore. It's not just the mom and pops who are going to wake up. It's going to be the rest of the world. It's going to be all of the small and medium-sized businesses. Every single publicly traded company that you know or has a ticker is going to play a role in accumulating Bitcoin, because if they don't, they're going to get left behind.
I love the importance of this like one Bitcoin. And I don't know it's an arbitrary number, like you could pick any number, but like round numbers are really important for human psychology. And I think a lot of people still have the goal of like getting to one Bitcoin. And let's be honest, like 100K is for the average person almost unreachable already. I mean, maybe for the average person in the US it's possible, but like average person worldwide, it's very hard for them already to get like the one Bitcoin. And it's super interesting that you cap that with like a single family home, because I think that's like a really good comparison. A lot of, I don't know how it is in America, but probably the same thing as you already said. In Austria and in Europe, it's like the home is kind of your savings account and your pension plan. And this couldn't. I really think we should now shift to Bitcoin. That might have been a good strategy like 50 years ago, but now Bitcoin is kind of the better strategy. And getting one Bitcoin above the value of a single family home will also put it closer and closer to gold, closer and closer to be the single most valuable asset. I think that's also another flipping point when Bitcoin flips gold. That will be massive also.
Yeah, I mean that's a 10x from here. So if we want to flip gold, we got to get over $20 trillion market cap, and I think gold's well above 20 trillion right now where it's trading, which is a clear signal to the marketplace. Fed chairs have always, if you go back and you read some of their work or listen to what they've said, the best ones always looked at gold to measure monetary policy. And if you can make the dollar stable against gold, you have proper monetary policy. But if the price of gold is going up against the dollar, then the policy is too loose. You need to tighten and you need to strengthen the dollar and bring the gold price back down. But as you well know, we cannot do that here in the United States. We cannot raise interest rates. Number one, because the entire real estate market here in the United States is frozen. Most people during the zero interest rate policy years were able to attain a very low interest rate. I mean, some of them as low as 2%, but most in the 2 to 4% area. Today, if you want to get a mortgage in the United States and you have a pretty decent credit score, you're going to be in like the 6 to 7 or 8% range, depending on your credit score and relationship with the bank. So the most qualified buyers are getting in that 6% range. And that is 50% more than the 4% of the higher end range of before. So those higher qualified borrowers, they're in the 2 to 3% range. And maybe they've been doing well and they want to upgrade from, they started out in a 2,000 square foot single family home. They upgraded to a 4,000 square foot home, and now their family's grown a little bit and they're looking to get into a bigger home with some more space, maybe a space with an extra property for some people that work on the property to take care of it and help the family out. And they're looking to make that move, but they can't. And then, so the people who are just trying to get in the game, forget about it. They can't even get access to credit to buy the real estate. So that's why that's the real reason the market is frozen. So it's kind of like this magic point in time where we have a frozen real estate market, and Bitcoin has the potential to soar past the price of that home. Because for any saver, anybody who is saving to buy a home, regardless of what country you're in, there's one thing that you understand. It's going to take more than a couple of years to save up to actually buy the home. And then over those course of years, the value of the home, the size of the home continues to go down, right? So the price of the home continues to go up. Therefore, the square footage that you can attain with your purchasing power goes down because the prices of the home are going up faster than wages. And there's no way to outpace that. And that's the real magic, I think, that Bitcoin has here through people's reserve. There's coming a new narrative that we haven't seen before, which bridges Bitcoin-powered finance to the real-world assets. And, there's a big narrative in crypto about real-world assets, but there hasn't really been that killer app yet because there's been no way to really connect the two. Tokenization of assets and all this other stuff doesn't really empower the individual. It might empower the corporation or a group of investors, but it's not financial engineering for retail, right? It's financial engineering for corporations and institutions. And at People's Reserve, we focus on financial engineering for retail. We want to make sure that you are empowered by Bitcoin. So now what we want to see become synonymous is that when you want to buy a home, the first thing you comes to your mind is, well, I better start saving in Bitcoin because Bitcoin is what's going to get me access to credit. And Bitcoin is what's going to give me the ability to save in a timely manner to purchase my home and to afford my home, because these homes are unaffordable. The market is frozen because of the interest rates. And even if the Fed lowers interest rates, prices are still so high right now that if they start lowering interest rates, demand will go up. That will push prices up. And the new base, you're very quickly, the median price of a family home will go from 400 to 450 up to 500 to 550. And that's, that's 100 to 150K value increase. Most people are not making 100 to 150K a year in their salary. The average salary here in the United States, I think, is around $55,000, $60,000. And then when you take into account expenses, you're lucky to save up $5,000 or $10,000 making that kind of money, especially if you have a family. If you have a family, you probably have credit debt, and credit debt is going to new all-time highs. So the purchasing power of the American consumer and consumers worldwide is, as we know, being drained from them through the design of the fiat system, through the ability of the governments to steal their purchasing power and spend it through printing. And Bitcoin finally comes in and says, you know what? We're not going to let this happen anymore. When you adopt Bitcoin as a savings technology and you use it, it's what Bitcoin does. Warren Buffett has a great quote. If you have to work to make money your whole life, you'll work until you'll die. You have to find a way to make your money work for you. Fantastic. I don't have to take my money and invest it to make it work for me. Bitcoin was engineered to work for me. It was strategically designed to leverage those natural laws of economics to work for me in its design. It doesn't need to be deployed to work. It works through its design, and it's working better than anything else we've ever seen. I think the 10-year CAGR right now is 82%. I mean, even at People's Reserve, I have we run models, and we try to figure out how to teach people and how, especially politicians with municipal Bitcoin bonds, how this can work. And we've been using the 50, 60% CAGR. And then we usually cut that in half to get to the 25, 30% CAGR that Michael sees in the long term. But the 10-year Bitcoin CAGR right now is 82%. So when you run the numbers on that, that's insane. That kind of growth is impossible in any other asset class in the world. So for those of you who are watching this show and you have that dream of owning your own home, you're not going to do it by saving in fiat currency units. It's fiat currency units lose value over time by design. Bitcoin gains value over time by design. That needs to be your savings vehicle. And when you make it your savings vehicle, you'll be able to accomplish your goals much faster. And when you have services like People's Reserve, when you finally get to that point, you actually won't need to sell the Bitcoin. You will just borrow against it. And now you're borrowing these inflating fiat currency units that lose purchasing power over time against your pristine collateral that gains value over time. And what happens is the burden of the debt shrinks. It shrinks over time to the extent at some point in time, you can eliminate that debt with the value increase in your Bitcoin. Now you own your home and your Bitcoin. You didn't have to give up your Bitcoin to buy the home. And these types of financial products are what's driving the monetization and financialization of Bitcoin, because the big players in the industry, they absolutely know what's coming, which is why we're in SPAC season right now. And they're getting prepared, because when these products go live, not only from us, but from all types of companies that are going to be offering these products and services, not exactly like ours, but similar. And be careful, choose your counterparty wisely, right? Make sure you understand liquidation risk. Make sure you understand what your options are in that contract. Make sure you understand your counterparty. Choose your counterparty wisely. And if you want to be with Bitcoin maxis who built for Bitcoin maxis, you'll want to be at People's Reserve. Now, if you don't care about that, then you can go with somebody else. If you want to make sure that your Bitcoin can't be liquidated based on Bitcoin's price volatility, well, then you'll want to be with People's Reserve. If you don't care about price volatility and you have a big stack and you're only borrowing a very small amount against it, well, then go to wherever you can get the best interest rate. But most likely, if you want the best interest rate, you're also going to be coming to People's Reserve. But if you pay attention to those 3 points, I think it's going to be really clear that the future of finance, of all finance, not just Bitcoin-powered finance, all finance will incorporate Bitcoin into it. And if it doesn't, it will just be eliminated because the incentive will break.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.